2023 has been an awesome year for stocks, as you probably already know, so I thought I'd give an update on some of the stocks and ETFs that I own, and whether or not I'm buying, holding, or selling them going into 2024. Now, as always, guys, feel free to let me know what you think of my portfolio and some of my holdings. I always enjoy having discussions about different stocks and ETFs and hearing your opinions on them. And if you want to stay updated on this portfolio, then make sure to subscribe to the channel. All right, so jumping into the portfolio, it's currently valued at $71,671 with a year-to-date return of 25.72%. So that's basically my total return for the year 2023. So I did beat the S&P 500 or the SPY, which is always the goal, but it's not actually where I wanted to be. You'll see here in a minute that I'm very heavily invested in tech and software companies, so ideally I would like to at least match the returns of the NASDAQ or the QQQ, but with its year-to-date return of 52%, obviously my portfolio completely underperformed that index. And the main reason why is because at the beginning of the year, I had a little bit too much in cash. About half the portfolio was just in cash for the first few months of the year, which ended up kind of working out because I was getting almost 5% on that cash with Robinhood's cash management feature. So I was technically making money that way, but because I had too much in cash, I missed out on about 20% in gains. But again, I can't complain too much because I did still beat the market by about 3 percentage points this year. I also add about $1,000 or so a month to this account, sometimes a little more than that, which of course always helps to grow that total account value. So my holdings are filtered by the amount of equity I have in each position, so it's listed from largest to smallest in terms of weight. Starting at the top, we have Microsoft, which makes up about 18.5% of the portfolio, or about 17,000 invested, with a total return of 12.6%, which of course could be a lot higher if I would have been quite a bit more aggressive in my buying at the beginning of the year. But like I mentioned earlier, it's nearly impossible to know exactly when stocks are going to rally, so I was a little late to the huge tech and AI wave that we had, but I'll still take that nearly 13% return. So Apple and Microsoft are two of my favorite companies to invest in. They both have pretty equal weighting in the portfolio. As you can see, Apple makes up 18.35%. I don't think I need to spend too much time on these positions because I'm sure at this point you probably know a lot about these two companies. But I think at least for the next 3 to 5 years, they'll continue to grow and dominate in their markets and produce those double-digit gains each year. So at least in the medium term, I'll continue to buy Apple and Microsoft, although right now they are pretty overbought and overvalued. This brings me to the third largest holding in the portfolio, which is Cadence Design Systems at 6.5%. So this is a semiconductor company, and I'm very bullish on semiconductor stocks going into 2024. The semiconductor sector rallied over 65% this year, and I think we'll see similar gains in 2024 as well. Semiconductors are basically in everything, right? They're in our phones, they're in our gaming consoles, they're in our cars, and now they've played a huge part in the AI movement as well. So I think a lot of these semiconductor companies have had the wind against their backs with all this momentum we've seen recently, and I think they'll continue that growth going forward. The next one is a lot different from most of the stocks in this portfolio. It's Costco at 5.13%. Costco is another one of my favorite companies to invest in. It's just a rock-solid, wide moat company that dominates in its market and rewards its investors year over year. They had a record year this year in terms of cash flow and revenue, so it's paying out a $15 per share special dividend that I think will be paid out mid-January. Now, because of all this good news, Costco pretty recently hit all-time highs and kind of heading toward that overbought territory, but that's been kind of the norm among all these fast-growing companies lately, but I'll definitely keep holding on to Costco long-term. Moving on to number 4, another semiconductor company called Broadcom at 4% of the portfolio. This stock also had an amazing year with a year-to-date return of 98%. And what I really like about Broadcom is on top of these massive returns, it still pays a pretty decent dividend for a tech stock at a little over 1.5%. So my upcoming dividend payment for Broadcom in a few days here will be $15.42. Up next, we have Synopsys, another semiconductor stock at about 4% as well, and a nice 12% total return. It did take a dive this past week, down about 6%, which might provide a good buying opportunity. This next one is Petrobras, which has been an awesome dividend-paying stock for the portfolio. I bought in about a year ago and averaged all the way down to a super low cost basis, as you can see there, of $9.75. So this means my capital return is currently 55% or $1,100, and that's not including the dividends I have been paid, as well as the pending dividend payments that are scheduled to be paid in the near future. As you can see, all of these upcoming dividend payments for early 2024. So it's been a great dividend paying stock for the portfolio, and I plan on holding for the next few years and continuing to reinvest those dividends back into the account. Next, we have Cintas at 3%, and it's one of the oldest stocks that I own. I think I've owned it for about 2 years now, with a 35% return. Just a great buy and hold stock in my opinion, kind of a boring company, but still a great buy and hold. Arthur J. Gallagher, an insurance company, took a pretty big hit this past month. It's down about 12%, but my total return is still positive at about 7%. So it might be a good time to start buying into this one as well. QLD is a leveraged ETF. It's 2x the QQQ. So whatever the QQQ returns, this ETF returns double that, whether it be positive or negative, offering more risk and reward. And I only really buy into this ETF when the index falls 15 to 20%. So when that does happen, that's when I scoop up a few shares. So needless to say, I haven't really been buying into this ETF lately, but more so watching it rise. So my total return is currently about 64%. And again, I don't recommend going all in on an ETF like this. Like I said, I only buy a few shares here and there when the QQQ falls, so definitely not one to put all your money in, but maybe just own a few shares of. Moving on, we have Google at 2.4% of the portfolio, and Google had a pretty great week this last week, up almost 7%, bringing my total return up to about 11%. So the rest of my holdings each make up about 2% or less of the portfolio. I'll just kind of scroll so you guys can see. And all the rest of these are to provide a little bit more diversification. You can see Berkshire Hathaway there, a few covered call ETFs like JEPQ and JEPI that I talk about quite a bit on my channel. And there's a few that actually ended up being total home runs, like Builder's First Source that's had an amazing year. I'm up 70% with about 6.5 shares, so not too much into this one, but still a great return. And then Uber down at the bottom here also had a huge run as well this year. Its year to date was over 142%, with my gain being over 86%. So a lot of these towards the bottom carry less weight in the portfolio since a lot of them are shorter term trades and tend to be more volatile and higher risk. But my plan for this portfolio is to actually consolidate a little bit more and make it more concentrated with about 15 to 20 different stocks rather than over 40 different stocks. I think I'm stretching myself a little too thin as of right now. So I'll potentially sell out of a few positions that I don't necessarily need and keep it more concentrated in 2024. But let me know in the comments below what you guys think of this portfolio. And if you guys enjoy these updates, then make sure to leave a like on the video as well, and I'll see you next time.